What's up, guys? Just wanted to make a quick video here. I'm on TradingView making this right now. I'm not using YouTube or StreamYard. Just wanted to make something real quick through TradingView. Everything got pretty beat up today, so that was interesting. Obviously, many people were paying attention to the market, and they're not fooling themselves. Understand what's going on here with the Fed. The Fed's going to raise interest rates more. I mean, ultimately, that's what we need here in the United States. We need the Fed. Really, we just need the Fed to get out of the way and just let the market do its own thing. They're they're sort of trying to get the market to do their dirty work, is what I would call it, where they're talking big to hope the market forces interest rates up, and then they'll have to reverse course eventually to try to re-blow this bubble back up. But I just wanted to show some just real quick technical stuff on here. Something actually I noticed. Let's go back to a weekly real quick. And sometimes it's easier on a line graph, but we'll keep it here. It's kind of awkward looking, and it's not a perfect neckline, but you can see right here we got head and shoulders. Now it started to make one here. If we zoom in, it started to make one right here. And this is where I thought that, hey, this is it. It's going down. But it had this other push, and it broke through the 50-day. And I was talking about, hey, watch this point right here. If this becomes resistance, I know it's broke past the 50-day. Maybe we are going to have another run up. But if this becomes resistance, that's a whole different story, right? Well, if we go to the daily chart, it doesn't look so bad with the head and shoulders right here, right? It looks like you're building something. You came to this head, you came down, built a neckline, you came up, and you'd think that, oh, well, it did come up to this point and it did sell off below, but it recovered back up. But here's the technical indicators I want to look at. So looking at let me go ahead and delete that one real quick. Yeah, let me delete that one too. Looking at the 50-day moving average, it started to become resistance at this point, right? The 50-day crossed the 100-day. That was a bad sign, but that doesn't necessarily mean, it's going to have this crazy sell-off. Maybe it was just going to turn into this correction, right? Well, then the 100-day became part of that resistance at the same time. It started to make this great recovery, ripped through the 50, ripped back through the 200, right through the 100, and looked like, oh, maybe this is going to curve back up and break back through. But if you look here, we'll look at a couple different things that just increase our probabilities of what we might think might happen from a technical perspective. From a fundamental perspective, this market's fundamentally wrecked. So, I mean, fundamentally, this thing should tank. But looking at this, we broke back down through here. The 100-day, this is going to be the key thing that people are going to be watching. That area right there. I would already say that, yeah, this thing's doomed. Like I wouldn't touch it. I'd be watching what the Fed's going to do. If they reverse course and they're going to pump a bunch of money or open up the credit spigots to the banks, then sure, maybe this thing could go ripping higher. But with what they're trying to do with interest rates, this is going to slaughter the market, right? And again, this needs to happen. There is way too much debt out there, way too much leverage on everything. It's a bubble. And the only way a bubble is fixed is it has to burst. And I think ultimately they're going to try to repump this. But let's look at this. So if the 100-day crosses this 200-day, you're going to start hearing on the news, which this obviously looks like it's going to happen very, very soon. You're going to start hearing on the news, oh no, are the bears correct? The 100-day just crossed the 200-day. This isn't looking good, which it's not good. And also, here's another issue. We sold off. We came up to the 200-day, and now, I mean, these are crossing at the same place. The 200-day and the 100-day just became resistance, right? That's not a good technical sign. And you're seeing part of the sell-off here. Some of this has to do with what the Fed talked about, how they're going to start raising rates at 50 basis points as a 0.5% interest. And we'll see if they maintain that. They really need to, but we don't really know what they're going to do. Oh, and let's just zoom out on this. Of course, these are your stocks in the S&P 500 that are below their 200-day moving average. And you can see where that's been going. It's been crashing for quite some time. The S&P 500, it's been carried by just the larger weighted stocks like Apple. So this has been over for quite some time. A lot of these stocks are really getting into buy areas, to be honest. So I'd be looking at them individually. But if we go down to the RSI, here's another another technical point we could look at. So with the RSI, we're breaking down below this halfway point, right? We came up, we bounced off that halfway point, and that's become resistance, right? And you can see where that's happened before. If we drag this down just to get a better view, let me go ahead and clear that one so we can see a little bit more. The last time we broke down under here and this area became tough to beat was in this. So I think we're building different types of patterns are popping up here that aren't good. We see our longer average here in the RSIs breaking below this point. If this yellow line maintains resistance, you kind of see that point here where it bounced off and sold way off. We could end up in a point like this where we fall to this zone. We could kind of see what happens in a short amount of time, and then you get this buy back up. But this type of stuff happened in 2008 too, where you have these sell-offs and buying and then sell-offs and then buying. You don't want to be the retail guy at that point. The big guys, they are dumping on you. You are going to be the bag holder. So I'd be very, very careful in this market with the S&P 500. Other stocks, of course, as well. Netflix has gotten beat up. Let's just pull that up real quick just to look at it. I think I mentioned this the other day, but I just want to point this out. Look at this. Look at Netflix. I mean, Netflix has completely crashed. It's down 70% off of its high. Right? Like this is like Harry Dent level stuff, right? Where he's talking about these huge, great stocks that would fall to more realistic levels or be completely oversold. But he's talking more about Apple and Google. Let's take a look at Apple. They're nowhere down anywhere near that. But just to go off one of their high points, their low down here was 17%. Apple's still up here. But what that is telling you is Apple is 6% of the S&P 500 weighting. So what happens if Apple sells off, right? So some of these larger stocks, if they have a sell-off, they will drag that S&P 500 down really, really quickly. A lot of the other stocks are already beat up. So I'd be watching these types of stocks. I know people were looking at them as safe havens. Apple's not really that bad, but there are a lot of stocks that were just way, way overpriced. While I have this going, let me click on, yeah. So this has just been just a killer play for us. We bought way back, down in here. That was a great run. But again, I mentioned that we could end up getting a sell-off here, head back down to the 50, and that's where we're at. This 50 is becoming a support line. I don't know how long that continues. As long as this whole Russian thing keeps going, I would see that continuing. But I think we're in the decade of inflation. Commodities are going to keep doing well. We may see this continue up and have this sell off and again continue up. We'll see what happens with it. But ultimately, I still think XLE is going to be something maybe over the next 5 years, 6 years. We can see this in the 120, 130 range. So I think it's just going to keep going. At least for now, you can see the volume profile down here. Plus, it's paying a dividend, right? So it's paying you to hold on to it. But anyway, this video is almost 10 minutes. I'm recording this on here. I'm not allowed to mention other social media outlets on here for anyone to follow or anything like that. So I just wanted to do this specifically on TradingView and get it out there for you guys to look at. Just a lot of stuff going on in the market right now. And man, look at that. Like this thing's, it's got to take its turn down. If we did have a major Harry Dent level crash, you'd be looking at these support lines here, right? In this range, you got another one up here, another one here. So there's different levels of support. I know on my other videos, I had some others. I think it was 3,700 was something that we were looking for as a main initial support for a pretty good size sell off. And to be honest, that's only, let's look at that. Look at that. That's only from its high, 22%. Right. So we're not even really down overall in the market. We're 11% off. All right. That's not a huge deal. The numbers are bigger because we just have higher numbers in the market, like 4,800 instead of 2,400. Right. But as they say, you have greater falls the bigger they are. So coming down to this level right before the pandemic really only brings us to the definition of a stock market crash, right? 30%. So it's very realistic to see a 3,300 S&P 500. That's totally realistic. The question is, how quickly does it get there, right? So the market thinks the Fed is bluffing. I sort of think they're bluffing too, but eventually they're going to come in and probably try to save the day because they can't have this high of interest rates. They won't be able to pay the interest on the national debt. Like government would be completely screwed on that. So I don't think that's going to be the case. But ultimately, they really have to. So the question is, do they bite the bullet and just do it now, let the whole market implode and say, sorry, guys, the party's over? I highly doubt it because these are politicians, right? Um, or they just continue to print money. They come in and save the day with some sort of crisis. They blame it on Russia. They blame it on another place. I don't know. Maybe we end up going to war. That's something I was talking about a year and a half ago, and it looks like we're pretty much there. But I'm going to let you guys go.